stocks. Flows accumulate as stocks. The flow of water in a stream can be accumulated in a reserve or reservoir behind the dam or in the cup we dip into the stream. The stock of water is then the number of cubic meters in the reservoir or the half a liter in the cup. Unlike a flow, a stock can be measured without references to a time period because it exists at a point in time. We can measure the stock of water in a lake at noon on the last day of the summer at 1.5 billion cubic meters, and at noon on the last day of the following winter as 2.0 billion cubic meters. Because the stock has increased, we can surmise that the inflow of water during the passing of 6 months has been greater than the outflow of water over the period, or over that period, by an amount of 0.5 billion cubic meters. Let us continue to assume that you receive a bi-weekly wage payment in the form of an electronic transfer for $8,825 a year for total annual income of $20,000. Note the slight inaccuracy with respect to a standard calendar year. We want to keep the number easy. On each payday, the electronic transfer appears in your bank account, increasing your deposit by $800. Your bank deposit represents a portion of your wealth held in the form of a financial asset, which is a claim on your bank. We examined the properties of the financial assets in Chapter 10. Because wealth is measured at a point in time, it is a stock variable. In addition to your bank account, you might also hold other forms of financial wealth, stocks and bonds and currency in your pocket, other types of bank deposits. I get lost in that. As well as real wealth, a car, real estate, a business firm, art, and jewels. Again, these are stock variables whose value is measured in terms of the money of the account at a point in time. Once you have received the 800 transfer, you begin to draw down your bank account to finance your purchases. Let us assume that your annual consumption will be $18,000 for the year, comprising purchases of consumer goods, food, fuel for your automobile, clothing, and consumer services, entertainment, medical care, and legal services. Hence, between wage payments, you spend a total of $720 for consumption, drawing down your bank account by that amount to finance these purchases. Over the year, your flow of wage income has been equal to $20,000, and you have spent $18,000 of that on consumption. Your flow of saving over the year is also equal to $2,000 because saving is defined as a residual dollar value of income that has not been spent over the period. This will accumulate as an addition to your stock of wealth if you allow the funds to accumulate in your bank account, which we will initially assume does not earn interest. The annual addition to your financial wealth will be $2,000. Alternatively, you could purchase an interest-earning bond or bonds, which is another form of financial wealth. In this case, however, you will also have a flow of interest earnings in addition to your labor income. The flow interest income flow of interest income, let us say it amounts to 200 over the course of the year. Will also add to your stock of financial wealth so that the total addition to your stock of financial wealth will be 2,200 over the year. However, there are many other possible uses of your saving flow. You might decide to buy stocks or other kinds of financial assets. Or you might purchase real assets, a classic car, real estate, or equipment for your family's business. Your saving decision can be analyzed as a two-step process. First, as a decision to withhold a portion of your income flow from spending, and second, a decision as to the form in which your wealth will be accumulated. An income flow is first realized as an accumulation of IOUs, normally claims on a bank in the form of a deposit. That is, the second step is used to purchase an asset, which might be another financial IOU or a real estate. One person's financial asset is another's financial liability. It is a fundamental principle of accounting that for every financial asset there is an equal and offsetting financial liability. The bank deposit account is a household's financial asset, offset by the bank's liability or IOU. A government or corporate bond is a household asset, but represents the liability of the issuer, either the government or the corporation. The household probably has some liabilities too, such as student loans, a home mortgage, or a car loan. These are held as assets by the creditors, which could be a bank or any of the number of types of financial institutions, including pension funds, hedge funds, or insurance companies. A household's net financial wealth is equal to the sum of all its financial assets equal to its financial wealth, less the sum of its financial liabilities, all of the money denominated IOUs issued or it issued. If the overall sum is positive, the household has positive net financial wealth. Example, stocks include stock of capital, inventories, financial wealth, and net worth. Next time I will be talking about inside wealth versus outside wealth. Stay tuned.